Hi everyone, I'm Ken from Crypto Trading KS. There were some really fascinating developments in markets in the past 24 hours. I'd like to give you a different way of looking at financial markets. There are always opportunities inside financial markets. You just have to know how to find them. With that said, let's run the numbers. Not all charts are created equal. Some charts are tier 1 charts, and you can see these particular charts here. I'm going to take you through a couple of them and give you an idea of how to link them together. Tier 1 charts are like alpha charts. They give direction to the market. Here we're looking at the tier 1 VIX chart. So something interesting happened when the VIX spiked down like this. It was the release of the CPI data. The CPI is all about consumer price inflation. Look at what's coming out when the markets open up in the next 24 hours. The PPI, or Producer Price Index. The CPI is fairly easy to understand. If the CPI is going up, you're paying more for things. If the PPI is going up, producers, businesses are paying more for things. That's it in a nutshell. I want you to pay specific attention to this. The VIX was going up, the CPI came out, the VIX plummeted, and then it rose before selling off. The reason I'd like you to pay attention to that is because of Rule 446. I talk about Rule 446 all the time. All markets are intercorrelated and interdependent. That means the VIX is causing spikes in other charts. Let's have a look at the types of intercorrelations. Junk bonds. We notice this is the VIX. As the VIX was plummeting down because the CPI was released, we know that the VIX came down. This means the fear left the markets. Where does fear leaving the markets often get felt? You got it, in junk bonds. What happened as the VIX came up? Junk bonds came down. And that would impact the indices. What happened here as the VIX was coming down? Junk bonds were coming up. This is no coincidence. This kind of thing happens all the time. The DXY, the US dollar currency index, is incredibly important. What did we notice as the VIX came down? You can see the overlay here. This is the VIX, this red line. The DXY just plummeted down. And what happened? We can see that the VIX stopped trading. Yes, the stock markets are kind of relaxed compared to Forex and especially compared to crypto. But if you've heard recently, Robinhood is going to cause that to end. It's going to be trading 24 hours a day. Well done, Robinhood. Yes, Robinhood has made it into the 21st century. Hang on a second, not this Robinhood. Sorry about that. This Robinhood. Robinhood to launch 24-hour trading on weekdays in stocks and ETFs. Hey Robinhood, what about the weekends? Getting back to it, you can see how the core inflation and the other inflation measures, when they were released, they moved the markets. What happened to the precious metal silver as the DXY plummeted down? It decided to plummet up, but as the VXY plummeted up, what did silver decide to do? It decided to plummet down. I think you can already see the patterns joining. If you don't look at the DXY and you're into silver or into gold or into just about anything else, there's a mistake on the cards there. But it's easy to fix. And don't forget, the Producer Price Index, the PPI, is coming out when the markets open, the main markets open. Yes, those lazy stock markets. Gold and silver have a very interesting relationship with each other. So let's have a look at gold. How does that compare to silver? You can see gold is holding up more effectively than silver. Relative strength is something that you want to focus on. Let's have a look at the US 10-year yield. And what do you notice happening? Say you were a gold investor and you were looking at the 10-year yield, and you might say, why would I look at the 10-year yield? I just want to look at gold. Gold, gold, and only gold. Well, you could certainly do that, but you would probably want as many different irons in the fire as you could possibly get on how gold could move. What do you see happening right now? The US 10-year yield is going down. What is happening to gold? You can see it already. It's going up. How can I tell that? Because this line is gold. You can see it's going up. This candlestick pattern is the 10-year yield. and it's going down. But why is the 10-year yield important? The 10-year yield is very important. It is a Tier 1 chart. But let's pop into the service and check it out. Popping into the CTKS Method service, we just click this Tier 1 chart, the US 10-year. The service is not just about the buy and sell levels. It gives you context on what you're actually looking at. And what is the US 10-year yield and how significant is it? The US 10-year Treasury yield is considered one of the most important economic indicators in the world. No wonder it made it into the top tier. The 10-year is the benchmark for other interest rates, including mortgage rates, corporate bond yields, and other types of loans. It's an indicator of the overall health of the economic system. When you know more about the charts, they take on a life of their own. The indices are very, very important to understand. Here we're looking at the NASDAQ. The NASDAQ, what did the NASDAQ do as the DXY plummeted? And you know what happened to the VIX? It also went down. What did the NASDAQ do? It rallied. What happened as the DXY and the VIX came up? The NASDAQ came down. There's an association in there that would potentially make you a lot of money. But you could say, Ken, I don't even trade the NASDAQ. I don't invest in the NASDAQ. I invest in Apple. The NASDAQ actually covers that company, as well as Microsoft, Amazon, Nvidia, Meta, Alphabet, Tesla, PepsiCo. You get the idea. It's important to look at. If you were a Tesla investor, you would want to keep your eye on the NASDAQ. What happened to the S&P 500 as the DXY melted down on that CPI data? It decided to go up. And then what happened to the DXY? After it melted down, it decided to go up. What happened to the S&P 500? It went down from there. But you can see as the DXY was going down, what happened to the S&P 500? It came up. There's a pretty interesting relationship in there. Please let me know what you think it might be. When the S&P 500 opens up for trading, it's going to encounter the results of the Producer Price Index. It had the CPI wobbling it around quite a bit. The PPI will do so as well. Just be aware. Another Tier 1 chart is Bitcoin. If you don't believe in the whole crypto thing, believe that Bitcoin is a very good risk-on and risk-off indicator, because it is. And that's exactly why it is a Tier 1 chart. What did we notice as the CPI data was released? We got an absolute pump in Bitcoin's price. But what happened next? The dump. And Bitcoin is still going down. But what do we notice here? We've got an overcoming of several key short-term resistance levels. We're starting to base. Could this mean that Bitcoin is going up? We can't realistically answer that question until we know the SZs, the Stanfield zones. And we're going to look at all of them, all the charts that I've just mentioned. We're going to quickly flip through them. But I need to show you this association first. Thank you so much, Art, for your very kind comment in yesterday's video. Art was talking about the CTKS Method service and said this will be a game changer for me. I'm so busy, I don't always have the time to mark up the charts, but with the service I can trust the charts presented. Art goes on to say, I highly recommend this service to any serious trader or investor, and I recommend the CTKS Masterclass and CTKS Method classes to all investors and traders who want to become proficient in their craft. I've been trading for over 40 years and this training has made me a better trader exponentially. Thank you so much. Art, that's very, very kind of you, my friend. We use the CTKS method to understand where the safety nets are inside market structure. And what do we notice here with the VIX? It couldn't penetrate this smart money sell area. When it dropped down, it couldn't even hold on to. It didn't even touch that real area there. It went to the next one and rebounded from the one below it. Price is always moving in a wave between smart money buy levels and smart money sell levels. And what do we notice? And this always happens. Price is always ping-ponging between a smart money buy level and a sell level, a buy level and a sell level. If it doesn't make it all the way down, that's called positive air. What does positive air actually represent? It represents potentially a change in trend. And that's what we got here. Notice that strength. When it got up, it blew through that smart money sell level. This is the VIX, but it couldn't hold it. It went down and started to find safety nets. You will see this all the time inside market structure. It does take a lot of time to understand how smart money buy levels and sell levels interact with each other. But when we look at junk bonds and we look at these Stanfield zones marked up from 1912, what we can see, a lot of positive air above this smart money buy area. What did that mean? That meant that there was a lot of optimism in the junk bond market, and we saw it go up, but it actually didn't make it into that smart money sell area, but it's trying to. But this is the natural resistance inside the market, and you can only tell this through the CTKS method. One thing that we know, when a smart money sell level cannot be breached, the next smart money buy level is in effect. And if there's a fresh air gap, it can just plummet down. But the same thing goes in the reverse direction. And what do we see the DXY doing right now? It's entering, re-entering this smart money sell area. Will it have some issues? Of course it will, because that's a smart money sell area. But what about if you were looking at the chart like this? You wouldn't know necessarily where the smart money sell areas are. Why would I say necessarily? Because some people would just use recent indicative price, and they would say something like this. They would say, because in the last 18 hours, the DXY came up to this level and it was rejected, that therefore is a short-term, all-encompassing rejection level. Well, they're not too far wrong, and that's why I said not necessarily. But the problem is, how would they ever dictate what these levels would be? Don't forget, the DXY plummeted down, broke through the first one, got sucked up by the second, and then returned up, gained strength, but was rejected by the one above. The truth is, the DXY has been trading since 1967, not just 18 hours. The CTKS method marks up all of price history and audits and vets it every single month. If you were only trading silver, you might say something like this: oh no, silver's coming down, I don't know why. Look at the DXY. That gives you a really good example of what's happening. Let's have a look at the smart money sell levels and smart money buy levels. We can see when the CPI was released, this smart money sell level didn't get penetrated at the top. It turned to resistance. The next one didn't hold. It came down. But there was positive air, and you can see that long tail rejection there as it made its way up. But it's been under continued stress. It couldn't make it through this 25.50 mark, and it's been rejected. Now you can see it's currently passing below this smart money sell area, which was a buy area, from about 25.16 to 25.20. The good thing with the service, all of these levels are available to you for the entire month. What's happening with gold? You can see that silver is overextending its losses. Very interesting in comparison to gold. Silver is kind of like an altcoin, and gold is kind of like Bitcoin, to use a crypto analogy. We need to look for ceilings or roofs and safety nets or floors. We can see when the CPI data was released, look at all this fresh air that was absolutely crushed, but gold didn't make it through this smart money sell level area of around the 2048 mark. We saw it was rejected continuously, so it was making its way down to the next smart money buy area. If it couldn't turn that to support, it would make its way down to the next. If it wouldn't go down further, it would come up to the previous one. And that's what happened. It didn't go down to this one, so it came back to this one. It doesn't take a lot of understanding to know that this is a license to print money. If you know where the market structure is inside any particular instrument, you can make your plans because of it. And what do we see here? Oh, this is quite interesting, isn't it? Gold is just rejecting that DXY smart money zone. We know there's overhead resistance in the DXY, so we're not too surprised that this is starting to turn around. It may keep on going down, be aware of that, because when you look at gold, this smart money buy level, this area down here is the next area that we would anticipate gold to find support. If it crunches through this area, and it doesn't stop there, it's heading to the one below. All of these levels are inside the service. One of the things that we see, even with the US 10-year yield, there was a lot of smart money sell area above that. The smart money didn't want the yields to crash through that. We saw the yields plummet down to the next level, but they've not been able to hold it, at least not so far. And just remember, the producer price index is coming out tomorrow, well, at the start of the US trading. If the CPI did this and we get a hotter than expected print, what do you think will happen to the US 10-year? If we get a lower than expected print, what do you think will happen to the US 10-year? And how will this play across the financial markets? Particularly, how do you think this will impact Bitcoin? You can see Rule 446 is a very, very professional rule. All markets are intercorrelated and interdependent. What happened with the NASDAQ? Where was the smart money sell level? It was totally here. You can see that just absolutely rejected the NASDAQ. It took some time to turn around and come back and retest it. Smart money sell levels are rejection levels. They generally flip price back the other way. The key to remember, this particular smart money sell area is marked up from the charts from 1973. It is not recent indicative price. It's very important to keep your eye on objective dynamic market structure, which is a term that I developed to explain the inherent and real market structure beneath any tradable instrument. The CTKS method is the first method in the world to reveal objective dynamic market structure, or ODMS. And you can see this is the S&P 500 marked up since 1871. We've not just taken the past 8 hours, the past 12 hours, the past month. We've gone all the way back to 1871. As Art was saying, a lot of people don't have the time to do this. What about the smart money sell levels and smart money buy areas on Bitcoin, the Stanfield zones? Where were the SCs? You can see with Bitcoin's price action, Bitcoin tried to break through this smart money sell area and convert it to a support area, but it just didn't work. Why didn't it work? Was it because the US government sold 10,000 Bitcoin? Well, if that was the case, then all other tier 1 charts will be normalized. And let's put the VIX on. What was the VIX doing? It was spiking like an animal, and then it decided to come down. But notice this, as the VIX was coming down, Bitcoin had already turned around. What did this mean for the S&P 500 at that time? We can see that Bitcoin could not escape the gravity of the stock market, and we know that's another rule. It plays out all the time. A lot of people talk about decorrelation, and I can understand their concept when you look at decorrelation classically. But when we look at financial markets, at least through the CTKS method, we're looking a little bit differently. We're looking at directional correlation. When we look at the S&P 500, do you see a directional correlation here? We can see that Bitcoin held up better because it was trying to get through this smart money sell area, and it was gaining positive momentum. But the S&P 500 just pulled it down. It pulled it down so much that it nearly came down to this next smart money buy area around the 26,600 to 26,700 area. But it didn't work because as the S&P 500 increased, and we know what happened to junk bonds, we know what happened to the dollar, we know what happened to yields. We are very, very sophisticated in how we look at financial markets. There's a massive correlation with Bitcoin's directional movement and the top alts. In fact, all of the alts, but especially the top. We can see it very, very clearly. When Bitcoin spiked down, and you know why it did it now, because of the tier 1 charts. That's why I say you can tell the news from the charts. Of course, you should always look at the news, but you can tell the news from the charts. What happened to Ethereum? Did it escape Bitcoin's gravity? No it didn't. It got pulled down. What are we seeing here? Oh, the start of a very interesting turnaround. I wonder what kind of retracement we could get there. Potentially could be quite good, but let's keep an eye on the 3 dimensions of price action. And what is that all about? We know the price can go down, it can go neutral, or it can go up. That's why we do our 3-dimensional risk management. You can do this as a trader and an investor. It's very, very important to do. We can see that Bitcoin is starting to turn up. Ethereum is starting to turn up, but look at this weakness here in BNB. Binance is the world's largest centralized exchange, and it's going down. We generally see in turnarounds Binance, BNB really outperforming the market. In fact, often we see it leading it. It's not doing that at the moment. It doesn't mean it won't turn around, but just keep your eye on it. XRP had a little bit of weakness, but it's starting to get a little bit better. Notice when I say that, I'm talking about this in Ethereum, this upward momentum here inside Bitcoin. Ethereum and Bitcoin, very, very similar, but you can see XRP broke below a support, very intermediate, very short range, but it did so. Maybe cracking the concrete. It's tending to confirm what BNB is saying. What about ADA? ADA is showing weakness. Could this be a flight to safety for the top 2 cryptos? It could well be. Let's have a look at Doge. What is Doge doing? It's a little bit weaker than what Bitcoin and Ethereum are doing. And especially if you look into this particular pattern just here. This is all about your pattern recognition. What about Solana? Solana is an animal. It can really spike up and down and all over the place. It's a really fascinating project. And look at poor old Matic. It's getting weaker and weaker and weaker. Oh, come on, Matic. But the key to understand here, no alt can escape Bitcoin's gravity. If it can escape, they're not going to do this thing, this particular pattern. Look at when Bitcoin comes down. What happened to Matic? It came down. It came down hard. What about Solana? It also came down hard. This is the way that the crypto market works. If you're not looking at Bitcoin and you're in some other altcoins, please look at Bitcoin. And if you're looking at Bitcoin and not looking at the tier 1 charts, ouch. This special episode on Rule 446 is incredibly valuable. Understanding how markets are intercorrelated and interdependent is one of the finest things that you can ever learn about financial markets. It takes a long time to understand this, in fact, many decades. And it also applies to major indices. For example, if you're in Australia and you're doing the ASX 200, please keep your eye on the S&P 500 and also the NASDAQ. And to know what they're doing, you need to look at Bitcoin and especially the DXY, as well as gold and silver. You can see you really need to look at a lot of charts if you want to be successful inside financial markets. Have a great day or night ahead, my friends, and remember Borsog, buy on red, sell on green. Bye for now.